And because I'll be posting this video online, I need to start by reading this disclaimer that the following presentation contains approximate rates and figures for illustrative purposes only. Mortgage rates and payments are dependent on various factors, including but not limited to program type, property and occupancy type, down payment amount, and credit and financial profiles. So please speak to your mortgage loan originator about all loan options available to you. Okay, so the reason we're here, the temporary buydown in a nutshell is when a seller agrees to give a credit to the buyer at closing that can be used toward a temporary interest rate buydown. Those funds go into a separate escrow account, which are then used to supplement the borrower's monthly mortgage payment during the buydown period. The amount of the credit needed from the seller will be included when the real estate agent submits the offer on the buyer's behalf and is dependent on whether the buyer is seeking a temporary buydown for 1, 2, or 3 years, which we'll see examples of on the next slide. My note here says that real estate agents can also contribute toward the buydown, so it's not usually going to be the case. But if you do have a seller willing to contribute some but not all of the buydown cost, I just want you to know that in case you need it during negotiations, I just want you to know that an agent or interested third party can contribute as well as the seller. We'll talk about the 2-year buydown first because it's the most popular. So in this example, the par rate for the buyer was 7%. So that is the rate that the lender qualified and locked them in at. So the principal and interest portion of their monthly payment would be about $2,500. With the 2-1 buydown, the borrower's interest rate would be 5% the first year and 6% the second year before going to 7 for the remainder of the loan term. So we can see that in the first year, the buyer is saving $488 a month on their monthly payment, which equates to about $5,860 a year. The second year, that rate goes to 6%, and they're still saving $250 a month, or about $3,000 a year. The total of the annual savings to the buyer during the buydown period is what makes up the cost to the seller. So this plus this equals about $8,860. If the parties agreed to just a 1-year buydown, then the savings to the buyer and the cost to the seller would be approximately $3,000. This is a quick example of the 3-2-1 buydown. As you can see, when we add another year of savings for the buyer, so too, we add a higher expense to the seller, and that is why the 2-1 buydown is the most popular option. A good example of when offering a 3-2-1 buydown might be strategic for the seller would be if the property has been on the market for a long time and has a high HOA. Let's say there's an HOA for $400 a month. This option would help offset that additional cost while the buyer eases into the mortgage. And of course, the seller can offload the property that they're trying to sell. Because the seller concession of the 3-2-1 buydown exceeds 3% of the purchase price in this scenario, if the buyer were getting conventional financing, they would need to be putting at least 10.1% down. VA and FHA buyers are allowed up to 6% seller concession, so should still be okay with the minimum down payments required for those loan programs. So this is what it's going to look like after closing. After closing, the funds in the escrow account are used during the buydown period to supplement the payment owed to the investor. So if the total mortgage payment that the investor is expecting is $2,500, the buyer pays their portion of the monthly payment, and then whatever is due to the investor, that remaining amount is being supplemented from the escrow account. So just for this example, we're saying the buyers, let's say this is the first year, they need to pay $2,100 a month. And for that first year, $400 a month is coming out of escrow. And so a question that we get a lot is, well, what happens if the buyer wants to refinance before the temporary buy down period ends? And I have good news, they don't just lose the money that's in the escrow account. So let's say next year rates are back in the fives and the buyer has been comfortable with that paying that amount during that first year. And so they know they want to refinance to lock in the lower rate and have the comfort of knowing the rate won't go up again in a year. So if they don't use the money that's left in the escrow account, whatever's left in the account will be applied toward the principal balance of the existing loan. So if they still owe $300,000 and there's $3,000 left in the escrow account, the actual payoff amount when they refinance would be $297,000 because they're applying the escrow balance to the principal. Okay, so we've talked about why this program is a great benefit to the buyer, and now I want to talk about what's in it for the sellers. So to do that, we need to take a look at some national averages. So depending on your market, where you're located, these numbers may be different for you. I know a lot of you are my Florida and Texas agents, and generally speaking, those markets do better than the national averages, but it's still worth taking a look at these numbers. In the last year, we saw sales decline by 36.9%. 7.5% of those sales sold below the listing price, and homes spent about 44 days on the market. So that was from listing to contract. And then from contract to close, you'd add another 30 days. So we are in a very different market than we were in 2021. We're seeing a power shift, so to speak. So educating sellers on the temporary buy down can help level the playing field a little. Why should your sellers offer a buy down? It is the number one reason is that it is more powerful than a price reduction. So in the example we saw before, where the buyer's payment was lowered by $400 a month, in order to have that same payment without the temporary buy down in place, they would have to find a home around $73,000 lower. So a price reduction of $10,000 or even $20,000 would not give the same benefit to the buyer. The seller makes their home more attractive. Buyers are taking their time viewing homes. And if your buyer is working with me and understands how the temporary buy down works, if they are interested in two properties, they are most likely going to make the offer on the home that's offering the ability to ease into their monthly payments. So that's going to improve your chance of selling quickly. Buyers in this market need to move and are looking for affordable options. So people are not in this market looking to buy homes that are more costly with higher interest rates because they just want to. They've either outgrown their home or they've moved to a new area or they are renting and want to become homeowners. So you've lost a big chunk of people that were in the market 2 years ago just because interest rates were so low. And it's affordable. Sellers, those of us who own homes and have for the last 3 or 4 years, have seen tremendous growth in equity. So we have some money left in our homes. We can contribute the approximately 2.2% to that buyer to make that home more attractive to them. And, before the pandemic, we were seeing a lot more seller credits, which are typically around 3%. So still cheaper than the 3%. All right, just to really quickly recap the benefits of the temporary buy down. It makes homeownership more affordable for the buyer. It improves the likelihood of selling quickly. It is more powerful than a price reduction. By the way, um, if your seller is willing to offer a temporary buy down rather than a price reduction, you're also keeping your commission intact. Buyers can invest in real estate now and enjoy value appreciation, and they can ease into the cost of homeownership. And then last but certainly not least, it's easy. There's no additional paperwork or addendum needed. You just add to the additional terms that the seller is willing to contribute the amount of dollars or the percentage toward closing costs, prepaid items, and or temporary buy down. So it is really important that you include that line and specify that they are contributing toward closing costs, prepaids, or temporary buy down. If your clients or colleagues have any questions about this or any other loan program, please don't hesitate to reach out to me. You can email me at amber.parr@tmf.mortgage or visit my website, amberparr.com, and I'm happy to help.